So you ever look at a financial chart and just see, well, a chaotic, meaningless scribble? It happens to everyone. Today, we're going to figure out how to find the hidden story inside all that chaos. And we're going to do it by understanding one simple but super powerful concept: trading timeframes. Yeah, at first glance, a trading chart can really look like pure randomness, just a jagged, unpredictable line bouncing all over the place. But what if, inside that chaos, there are actually multiple stories being told all at once? The key to understanding them? It's all about choosing the right perspective.
And that perspective, that's what we call a time frame. And you know what? It's a beautifully simple idea. You see all those little red and green bars on the chart? People call those candles. And each one just tells the story of what the price did over a set period of time. A time frame is just how long that period is. So on a 1-minute chart, each candle is 1 minute of action. On a daily chart, each one represents a whole day. This one little setting, it changes everything.
Think of it like a trade-off. A small time frame, say a 1-minute chart, gives you all this fast action and incredible detail. You see every tiny little price jump. But a higher time frame, like the daily chart, it kind of filters out all that noise. It paints a much calmer picture, and more importantly, it shows you the clearer underlying trend. And this leads to the absolute best way to think about it. Small time frames let you see the individual trees, but the higher time frames, they let you see the entire forest. So let's put that to a quick test, right? If you looked at the exact same stock on a 1-minute chart and a daily chart, side by side, which one do you think would look calmer? I mean, you'd see it instantly. It's the daily chart. By squishing an entire day of frantic up and down action into a single candle, the bigger picture just gets so much smoother. The overall direction becomes way easier to spot. Okay, so that brings up a really crucial question. If the higher time frames are calmer, and they show the trends so well, why would anyone even bother with the noisy, chaotic, smaller ones? Well, this is where the real strategy comes into play. You see, experienced traders don't just pick one time frame. They use multiple, kind of like looking through 2 different lenses to get the full picture.
And the strategy boils down to a really simple 2-step process. Step 1, you use your forest view, that high time frame like the daily chart, to find the main trend. Is the market generally heading up, or is it heading down? Once you know that big picture direction, you switch lenses. Step 2, you zoom into a small time frame, maybe a 15-minute chart, to pinpoint the perfect moment to actually get in on a trade that goes with that bigger trend.
It all really comes down to this one powerful idea. You use the big picture to find your direction, and then you use the small picture to nail your timing. In other words, you see the forest for the trend, and then you pick a tree for your entry. It's the perfect blend of that broad strategy and super precise tactic. So the next time you look at a chart and it seems like just a bunch of random noise, remember this: you have the power to change the lens. You can zoom out and see the grand story unfolding, or you can zoom in to see the details of right now. The chart isn't just telling one story, it's telling a whole bunch of them. So now that you can change the time frame, what story are you going to choose to see?